Hello and welcome to this free course about trading journals, trading routines, and we will cover the topic how a trading journal can save your trading. So let's start here with a quick introduction. We all know the statistic 95% of all traders fail, but what research has shown is that this number is actually much higher. We have compiled a few broker research statistics in this little graphic, and you can see 40% of all traders only trade for 1 month. 80% quit within the first 2 years. Only 7% of all the people who start trading remain after 5 years. And only 1% of all traders can profit net of fees. So you can see the 95% rule should actually be called the 99% rule. But at the same time, I don't think that traders fail because trading is very hard, but because they lack the approach and the seriousness. So here, let's get right into the problems that traders have, and all those problems are not looking at charts because the problems that cause trading failure can mostly and sometimes even exclusively be found in the way traders approach their trading. There are psychological issues and other related problems. So here are the 4 main problems that traders have. The first one is that they are not able to quantify the mistakes, so they don't really understand why they are losing money and how they are losing money. And then this leads to excuses and guessing. And we all know those traders who always blame insider trading, high frequency trading, algorithmic trading for their trading failure, but they don't really have a real idea why they are actually losing. Second, many traders repeat the same mistake hundreds and hundreds of times. And those mistakes are often revenge trading, over trading, not trading with rules at all, breaking their rules, FOMO, which means the fear of missing out where you enter early. And often when you look at a trader, you can see that his losses are not due to many different failures, but they can often be condensed to just a handful of mistakes, and the trader keeps repeating the same mistake over and over again. And we will see later how to stop this vicious cycle. Then the third part is that they don't have a structure. They are just stumbling around, which is a major amateur problem. And this leads then often to missing trades. Many traders, they randomly flip to time frames. They are always on different time frames, just hunting for signals. They are wasting their screen time because they don't really know what they are looking for in a price chart, and they don't really understand their method. And then also they are chasing trades often. And finally, many traders don't know what works and when it works. So they don't really understand their method and their system, their trading approach at all. They don't really have rules in place, or they keep breaking their rules. And this leads then to system hopping. System hopping or method hunting is a very big problem, and I'm sure many of you are aware of that. System hopping basically means that after a few losing trades, the trader changes his complete approach. He uses a new trading method, a new strategy. He thinks that because he lost money, his trading strategy does not work, and then he's looking for something new. What is very important to understand is that no system will work right from the start, and you have to understand your trading performance, and also what is causing your losses and what is working well for you in order to become a profitable trader, and we will get into this in a bit. So instead of always looking at your results, you have to look at the process. This is not only a thing that is valid in trading, but in any other profession and skill in your regular life. In trading, we know that not all winning trades are good and not all losing trades are bad. Sometimes we just have a winning trade because we get lucky. Sometimes we have a losing trade because just the setup failed, but overall it was a good trade and we did everything right. So it is very important that we are going away from what we see on the left-hand side. This is the results-oriented mindset where most amateur and losing traders are, and we have to get into the right and the process-oriented mindset where all the professionals are, not only in trading but in any other skill and in any other profession as well. So you have to think long-term. One trade in your trading career does not mean anything. This is very important to understand so that you can move to the process-oriented mindset. So we have to get into a mindset where we focus on execution and where we always focus on making the best trades possible, and then the money will follow eventually. And the solution to all that is having a good trading journal and a trading process. What this does for you is very simple. First, it helps you become aware of your mistakes, and it helps you become aware of your trading in general. Just ask yourself, do you remember your last 5, 10, or 20 trades? If you are like most, then probably you won't remember that, and that is totally fine. Most traders are like this. But at the same time, it is very important to acknowledge that. So you need to have a way to keep track of your trading data, to keep track of your mistakes, of your behavior, so that you have a way of understanding what have you been doing, what is working out for you, what isn't working, and how can you change that. And then you can recognize the mistakes before they happen and start avoiding them. I will show you later with the Edgewonk Trading Journal how you can do that and how many traders have found amazing results already. You also have to create a structure in your trading because it will help you save time. This is especially important if you are still having a regular day job where your trading time is limited. So having a journal and a process, even though it sounds like more work in the beginning, it will actually save you time. It also will help you get into better trades because you understand what is working well for you. And then eventually we can improve our performance as traders. And this all leads to trading with confidence. And we all know that only a confident trader who has trust in his system can make very good trading decisions. So as I said, the must-have tool is a trading journal. It doesn't matter which trading book you read, which professional trader you ask, which trading mentor you ask. Everyone will tell you that the number one tool any trader must have is a trading journal. Many traders get wrong is that they believe a trading journal is just a notepad, a little book where they scribble down their notes, a Word document, or an Evernote notebook. But this is not what a trading journal should be like, because a trading journal has to give you actionable tips based on your own trading performance, your behavior. It has to be customized to your own trading approach because every trader is different. So a trading journal really has to be customized to what you are doing and to the things that you want to improve. And that is why we created Edgewonk. And in the next videos, we will get into the Edgewonk Trading Journal. I will show you step by step how it can be customized to your own trading, how you can improve your trading step by step. We have built features that will allow you to tweak every aspect of your trading, from entries to exits to stops, risk-reward ratios to risk. You can fight with it your emotional problems and overcome psychological challenges, and we will get into that as well. And then once you are using a trading journal, you can move away from the conventional hit or miss approach, which most amateur traders follow. It is on the right side, where you try something, you fail, you try something new, you fail, you try something new, you fail. And then eventually, after having gone through this cycle for sometimes months, sometimes even years, the trader quits because he's just too frustrated. But on the other hand, a trader who has a journal, a process, who understands that he has to be in the long-term mindset, he can be in the evidence-based practice mindset, is he tries something, he might fail, then he goes back to the drawing board, he analyzes his failure, his performance, he makes a little bit of an adjustment based on the things that his trading journal tells him, then he tries again, maybe he fails again, but this time he has learned something, his performance is probably a little bit better, and so over time, by just trying, analyzing, adjusting, he eventually will make a progress and become a better trader. And probably, as you know, this is not only true for trading, but in anything in life. You don't start out as a professional, you always start at the bottom, but you don't expect to be a professional just within a few weeks. You have to work your way up, and this is only done by constant work, improvement, and also responding to what you are seeing. And so I hope you understand now why having a trading journal and a routine is so important. And in the next videos, we will get into the Edgewonk Trading Journal and I show you how you can do that yourself as well.